Welcome, music lovers, to an exciting exploration of Spotify, the world's leading music streaming platform. Today, we'll delve into the financial figures that shape the company and uncover what's in store for its future. So, grab your headphones, and let's get started. First up, let's talk about Spotify's price-to-earnings ratio, or PR. Over the trailing 12 months, the company has no data because it has had losses since 5 years ago. That's a caution sign, indicating an unstable financial performance. Looking ahead, we see a forward price-to-earnings ratio of a staggering 318.26. While it's important to be cautious about such a high number, it does suggest strong investor confidence in the company's future prospects, and the possibility that Spotify manages to close a year with benefits for the first time. Now, the price-to-earnings-to-growth ratio, or PEG, remains unavailable, as we don't have access to the EPS next 5 years data. This could be an area to watch for updates, as it provides insights into the company's growth potential and fairly valuation mechanism. Moving on, let's talk about some key profitability ratios. Spotify's return on equity, or ROE, stands at -42.70%, while the return on assets, or ROA, is -12.80%. These figures indicate that the company faces challenges in generating profits from shareholders' equity and assets. Speaking of earnings, Spotify reports an earnings per share, or EPS, of -5.44. This suggests a net loss per share, which is important to consider when evaluating the company's financial health. Unfortunately, the EPS next 5 years data is not available, leaving us uncertain about future earnings projections. It's crucial for investors to keep an eye on any updates in this area. Now, if you're wondering about dividends, Spotify currently does not offer any dividend payments to its shareholders, but it is logical since it is not yet capable of generating benefits, and it is also using the maximum resources at its disposal to try to obtain them. Next, let's explore the company's operating and profit margins. Spotify's operating margin is -6.90%, while the profit margin is -7.80%. These margins indicate that the company operates at a loss, facing challenges in keeping costs under control. Time to dive into the financial performance over the last 3 years. Spotify has experienced a very positive trend in revenue, with strong growth each year. However, the same cannot be said for earnings, as they have seen negative results in each of the past 3 years. But don't worry, this is likely due to the company's strategic decision to reinvest heavily to drive future growth. Now, let's talk about free cash flow. Spotify seems to invest almost all its available cash into growing the business, which is why it shows minimal free cash flow over the past 3 years. We cannot overlook the company's debt-to-equity ratio, standing at 0.82. This suggests that Spotify has a relatively conservative level of debt, and all debt is long-term, which may be viewed positively by investors. The average price return of the last 52 weeks stands at 14.85%. This indicates a positive performance for shareholders over the past year. Unfortunately, and despite being a relatively new company, the market has considered that the 5 consecutive years of losses are too many, and that is why Spotify's total return in that period has been around -20%. Currently, Spotify boasts a market cap of a staggering $27.04 billion. Making it one of the giants in the tech and music industry. Finally, what does the future hold for Spotify's stock price? Analysts predict an average price of $154.71 in the next 12 months, representing a potential upside of 12.5%. However, I believe the fair value to be $128.65, suggesting a possible overvaluation at the current price. And there you have it, folks. Spotify's financial landscape painted in vivid detail. Remember, investing always carries risks, and it's crucial to do your own research before making any decisions. If you found this analysis helpful, smash that like button, and don't forget to subscribe for more exciting financial insights. Until next time.